Richard Dennis was born without pedigree, privilege, or prophecy. He did not arrive bearing the marks of finance's aristocracy. He began instead as a runner on the trading floors of Chicago, absorbing the cadence of shouted prices and the brutal honesty of the pit. There were no safety rails there, no indulgence for theory divorced from results. You learned quickly, or you were erased. Dennis learned. By his early 20s, he had transformed borrowed capital into millions. By his 30s, he had become a legend, not because he never lost, but because he understood loss as tuition rather than verdict. What distinguished Dennis early was not bravado or luck, but a ruthless respect for reality. Markets, he observed, do not reward intelligence, morality, or good intentions. They reward discipline, consistency, and the capacity to act correctly under pressure. This understanding hardened into conviction during the great commodity booms and busts of the 1970s, when fortunes were minted and annihilated with equal indifference. Dennis emerged not unscathed, but undefeated in spirit. He internalized a simple truth. The market does not care who you are, only what you do. From this came his most radical belief, that trading success is not a gift bestowed at birth, but a craft that can be taught. In an industry intoxicated by mystique, Dennis committed heresy. He wagered that rules, followed with iron discipline, could outperform intuition, charisma, and so-called genius. This belief culminated in what would become known as the Turtle Experiment, a direct challenge to the myth that great traders are born rather than made. He recruited ordinary people, men and women without prior trading experience, and trained them in a rigid mechanical system. They were taught when to enter, when to exit, when to add, and when to stand aside. Emotion was not consulted, ego was not entertained. The results were devastating to romantic illusions. The turtles made money, serious money, not all of them, and not all the time, but enough to prove the point beyond argument. Discipline, when paired with sound rules and relentless execution, could rival the legends. This was not merely a trading revelation. It was a philosophy of agency. Dennis demonstrated that excellence is less about brilliance than obedience, to process, to probability, to long-term thinking. Central to his wisdom was the embrace of uncertainty. Dennis did not seek to predict markets. He sought to respond to them. Prediction flatters the ego. Reaction preserves capital. He understood that the future is opaque, but behavior can be governed. By focusing on what could be controlled, position size, risk limits, exits, he removed the need for certainty. Losses were expected, even welcomed, as long as they were small and survivable. The catastrophe, in his view, was not losing money, but violating rules. This mindset demands a rare form of courage, the courage to be wrong repeatedly without losing faith in the method. Dennis knew that even the best systems fail more often than they succeed. What matters is not the frequency of victory, but the asymmetry between loss and gain. Cut losses quickly. Let winners run. This principle sounds trivial, yet it annihilates most who attempt it, because it requires humility in defeat and restraint in triumph. Humans are wired for the opposite. Dennis was unsentimental about pain. He did not pretend that drawdowns were pleasant or that discipline was easy. He accepted discomfort as the price of admission. In doing so, he exposed a deeper lesson. Suffering becomes intolerable only when it is meaningless. Loss within a framework is instruction. Loss without a framework is trauma. His entire approach was an architecture designed to convert chaos into information. Equally important was his refusal to chase excitement. Dennis warned against the intoxicating desire to trade constantly, to feel engaged, to prove relevance through action. Markets, he believed, reward patience more than activity. The correct position is often no position at all. Waiting is not weakness, it is preparation. This principle extends far beyond trading. In any domain governed by uncertainty, restraint is a form of strength. Over time, Dennis's career would include setbacks, periods of underperformance, and philosophical evolution. He never claimed infallibility. What he maintained with almost stubborn clarity was that long-term success belongs to those who survive. Survival, in his lexicon, was not passive endurance, but active risk management. He treated capital as a soldier treats ammunition. Never wasted, never gambled, always conserved for decisive moments. At the core of his legacy lies an almost ascetic belief in rules. Not rules imposed by authority, but rules chosen consciously and obeyed religiously. Freedom, Dennis implied, is not the absence of structure, but mastery within it. The trader enslaved by impulse is not free. The trader bound by rules he understands is sovereign. This inversion of conventional thinking is perhaps his most enduring contribution. Dennis's life offers no cinematic arc of constant ascent. It offers something far more useful, a model of how a rational mind can impose order on a hostile environment. He did not conquer markets by force of will, but by submission to probability. He did not seek to be right, he sought to be consistent. In doing so, he built wealth, influenced generations, and punctured the vanity of an entire industry. His wisdom endures because it is portable. The principles he lived by, risk first, discipline always, emotion last, apply wherever uncertainty reigns. They apply to business, to conflict, to ambition itself. The lesson is stark and bracing. Greatness is not a mood, it is a habit. It is the quiet, repetitive act of doing what works, especially when it is boring, uncomfortable, or lonely. Richard Dennis did not promise certainty. He offered something rarer, a way to operate effectively in its absence. Richard Dennis believed that most people fail not because the game is unwinnable, but because they refuse to play it as it actually is. He understood that reality is not impressed by desire. It responds only to behavior repeated over time. From this premise flowed his most severe wisdom. Systems matter more than opinions, process matters more than confidence, and survival matters more than brilliance. Dennis rejected the seduction of explanation. Markets move for reasons that are often unknowable in real time, and sometimes unknowable forever. He considered the search for narrative to be a psychological crutch, a way for the ego to feel safe. What mattered was not why price moved, but that it moved, and whether your rules allowed you to benefit or be harmed by that movement. The disciplined trader does not need a story, he needs an exit. This refusal to romanticize understanding led Dennis to a brutal clarity about risk. Risk was not an abstract concept to be discussed after the fact. It was the first input, the anchor around which all decisions revolved. Every position began with the question, how much can I lose if this is wrong? Only when that answer was acceptable did action become permissible. In this way, Dennis inverted the instincts of most people, who begin with dreams of gain and negotiate with loss only once it arrives. Losses to Dennis were not evidence of failure. They were the cost of participation. He expected them. He planned for them. He structured his entire operation so that losses were small, frequent, and emotionally survivable. This expectation stripped losses of their power to humiliate. They became mundane, procedural, almost boring. The real sin was not losing money, but losing discipline. He was especially severe on the subject of hope. Hope, he believed, is lethal in markets. It persuades you to delay exits, to rationalize violations, to reinterpret rules after the fact. Hope whispers that this time is different. Dennis countered hope with pre-commitment. Decisions were made in advance when the mind was calm and unthreatened. In the moment of stress, there was nothing to decide, only to execute. Freedom, in his worldview, came from having already chosen. Dennis also understood the psychological violence of winning. Success intoxicates more efficiently than failure. After a run of profits, the trader begins to feel chosen, insightful, exempt. Rules start to feel optional, position sizes creep upward, caution is rebranded as cowardice. Dennis treated this phase with suspicion. He knew that arrogance is merely deferred loss. His answer was consistency. Trade the same size, follow the same rules, behave the same on your best day as on your worst. Emotionally flat was the goal. The turtle experiment reinforced another of his convictions. Most people sabotage themselves not through ignorance, but through inconsistency. The rules the turtles were taught were not secret. They were not elegant. They were not even particularly clever. They worked because they were followed. The few who failed were not less intelligent. They were less obedient. They deviated, hesitated, improvised. Dennis saw in this a general law of human failure. People abandon what works the moment it becomes psychologically uncomfortable. He taught that trends are not predictions, but permissions. When price breaks out, it is not a prophecy about the future. It is a signal that something is already happening. The trader's role is not to be early, but to be aligned. Being late and right is infinitely superior to being early and wrong. This humility before momentum distinguished Dennis from those who sought to call tops and bottoms. He did not hunt reversals. He rode strength until it proved him wrong. Equally central was his respect for time. Dennis operated on the understanding that outcomes reveal themselves unevenly. Long stretches of stagnation are punctuated by brief periods of extraordinary opportunity. Miss those windows and the year is lost. Overtrade during the quiet periods and you erode yourself before the moment arrives. Patience, therefore, was not passive waiting, but strategic conservation. He saved his psychological and financial capital for moments that mattered. Dennis also rejected the moralization of markets. He did not believe prices were fair or unfair, rational or irrational. They simply were. To complain about them was to confess impotence. This emotional neutrality allowed him to act decisively where others froze in outrage or disbelief. He trained himself to accept what was happening without commentary. Acceptance was not resignation. It was the prerequisite for effective action. Over time, his philosophy hardened into something almost stoic. Control what you can. Accept what you cannot. Do not confuse effort with effectiveness. Do not confuse motion with progress. The trader who survives longest is not the most inspired, but the least surprised. Dennis built his edge by expecting disappointment and being prepared for it. Perhaps his most subversive lesson was this: simplicity scales, complexity collapses. Complex systems invite interpretation, and interpretation invites ego. Simple systems leave no room for debate. They do not flatter the intellect, but they protect the account. Dennis understood that sophistication is often camouflage for indecision. Clarity, by contrast, is ruthless. He also demonstrated that conviction is not stubbornness. When his methods stopped working for him personally, he did not pretend otherwise. He evolved, stepped back, redirected his focus. This flexibility was not a betrayal of his principles, but their extension. Discipline is not clinging to a rule forever. It is knowing when a rule no longer serves survival. Dennis's deeper message was never about trading alone. It was about how humans confront uncertainty. Most people seek certainty before acting and are paralyzed when it never arrives. Dennis acted without certainty and built structures that made uncertainty tolerable. He replaced prediction with preparation, belief with probability, emotion with execution. In this way, his life offers a severe but liberating creed. You do not need to be special. You need to be consistent. You do not need to be fearless. You need to be prepared. You do not need to win often. You need to lose correctly. Master these, and time will do the rest. Richard Dennis did not promise glory. He promised durability. In a world obsessed with talent, he bet on temperament. In a culture addicted to explanation, he chose obedience. His wisdom endures because it tells the truth without consolation. Success is not a moment of brilliance, but a long obedience to rules you chose when you were thinking clearly. Richard Dennis understood that mastery is not loud. It does not announce itself with excitement or certainty. It accumulates quietly through repetition, restraint, and a stubborn refusal to self-sabotage. His wisdom sharpened around a single axis. Behavior under pressure reveals everything. When uncertainty rises, most people reach for comfort, stories, opinions, excuses. Dennis reached for rules. He taught that the market is a mirror that reflects emotional weakness with cruel precision. Fear, greed, impatience, and vanity are not punished morally. They are punished mechanically. Price does not negotiate. It executes consequences. The disciplined operator accepts this without resentment and adapts accordingly. This acceptance is not passive. It is active alignment with reality as it exists, not as one wishes it to be. Dennis placed extraordinary emphasis on position sizing. He knew that ideas are cheap and confidence is abundant, but capital is finite. The size of a position determines whether a mistake is educational or fatal. By keeping risks small and uniform, he ensured that no single error could define the outcome. This approach converted randomness from a threat into a tolerable background condition. You could be wrong many times and still be alive for the few moments when you were spectacularly right. He also understood the corrosive effect of boredom. Following rules is monotonous. Waiting for signals is dull. Executing exits without drama feels anticlimactic. Most people flee boredom toward stimulation and stimulation toward ruin. Dennis embraced boredom as proof that the system was working. When trading felt exciting, he grew cautious. Excitement was a symptom of ego entering the process. Another pillar of his thinking was separation. separating identity from outcome. A loss was not an indictment of intelligence or character. A win was not validation of superiority. Both were data points within a larger sequence. This detachment insulated him from emotional whiplash and allowed him to make the same decision repeatedly without distortion. Consistency, he believed, required impersonality. Dennis warned against selective memory. Humans remember victories vividly and minimize losses, constructing a flattering internal narrative. He countered this tendency with meticulous record-keeping and ruthless honesty. If the numbers did not support a belief, the belief was discarded. Loyalty to truth outweighed loyalty to ego. This habit alone separated professionals from gamblers. He also rejected the fantasy of control. Markets are not tamed, they are navigated. Attempting to dominate them through force of will leads to overtrading and denial. Dennis instead cultivated responsiveness. When volatility expanded, he adapted. When trends weakened, he reduced exposure. He moved with conditions rather than against them, conserving energy for moments when alignment was strongest. One of his quieter insights was that rules create courage. When decisions are predefined, action becomes simpler. There is no debate, no paralysis, no bargaining. Courage emerges not from fearlessness, but from clarity. Knowing exactly what to do and what not to do liberates attention and steadies the hand. This principle extends far beyond markets into any arena where pressure degrades judgment. Dennis also emphasized that opportunity is episodic. Great gains do not arrive evenly spaced, they cluster. The prepared individual recognizes this and resists the urge to force outcomes during barren periods. Forcing trades, forcing progress, forcing momentum, these are expressions of impatience masquerading as ambition. Dennis treated inactivity as a strategic posture, not a failure of nerve. He was unforgiving about rule violations. A small breach was never small. It was precedent. Once you allow yourself to bend a rule, you teach yourself that rules are negotiable. Negotiable rules collapse under stress. Dennis demanded precision not because he was rigid, but because he understood human psychology. He knew how quickly discipline erodes once exceptions are permitted. At a deeper level, his philosophy was about dignity. To act according to chosen principles in the face of uncertainty is a form of self-respect. To abandon them for short-term relief is self-betrayal. Dennis valued the former over any single outcome. He built systems that allowed him to look back on his actions without embarrassment, regardless of profit or loss. He also demonstrated that detachment does not mean disengagement. He cared deeply about execution, he cared about survival, he cared about improvement. What he refused to care about was being admired or vindicated. The market was not an audience, it was an environment. Performance, not perception, determined survival. As years passed, Dennis's ideas proved resilient because they were grounded in human nature rather than prediction. Technology changed, instruments evolved, volatility regimes shifted, yet the core problems remained the same: impatience, overconfidence, fear of loss, addiction to excitement. His framework addressed these directly, without sentimentality. His legacy endures because it is severe and therefore usable. It does not promise ease, it does not flatter talent, it demands self-command. The reward for meeting that demand is not certainty, but durability. Durability compounds. Over time, it outpaces brilliance that burns too hot and too fast. The essence of Richard Dennis's wisdom can be stated plainly. Choose rules when calm, follow them when afraid, and accept outcomes without drama. Do this long enough, and the arithmetic of survival begins to work in your favor. Ignore it, and no amount of insight will save you. If this way of thinking resonates, if clarity, discipline, and long-term advantage matter more to you than momentary excitement, then stay with this work. Like and subscribe for more financial wisdom from history's greatest traders and investors, distilled.